Question 826. A note payable for interest only is referred to as an A. Negotiable note. B. Soft money loan. C. Amortized loan. D. Straight note. Correct answer is D. Straight note. A negotiable note is a specific type of promissory note that meets certain legal requirements, making it easily transferable from one party to another. Its negotiability is important because it allows the holder of the note, the payee, to transfer their rights to collect payment to a third party. This third party can then enforce the payment, often without being subject to all the defenses that the original maker, debtor, might have had against the original payee. The term soft money loan doesn't have a single, universally strict legal definition. It generally refers to loans that are offered on more lenient or favorable terms than conventional market rate loans. These loans are often provided by governmental agencies, non-profit organizations, or sometimes even private lenders for specific purposes. An amortized loan is a loan in which the principal and interest are paid down over the loan term through a series of regular, equal payments. With each payment, a portion goes towards paying the interest accrued, and the remaining portion goes towards reducing the principal balance. In a straight note, or interest-only loan, the borrower makes periodic payments that cover only the interest accrued on the principal balance. The entire principal amount remains outstanding and is typically due in a lump sum payment at the end of the loan term. Question 827. In the General Accounting Practices system for trust funds, all of the following tools should be used, except A. Journal. B. Cash ledger. C. Columnar. D. Beneficiary ledger. Correct answer is C. Columnar. In general accounting practices for trust funds, the fundamental tools used to ensure accuracy, transparency, and proper management are journals and ledgers. Journal is a book of original entry where all financial transactions are recorded chronologically. It's the first place a transaction is entered. This is a fundamental and essential tool for any accounting system, including trust funds. A ledger organizes transactions by account. A cash ledger specifically tracks all cash receipts and disbursements. For a trust fund, accurately tracking cash is paramount. This is an essential tool. For a trust fund, it's crucial to keep separate, detailed accounts for each beneficiary, showing what funds belong to them, what has been disbursed, and what remains. A beneficiary ledger, or separate beneficiary accounts within a general ledger, is indispensable for proper trust accounting. Columnar term refers to a format for journals or ledgers, where specific types of transactions or accounts are organized into columns for easy tracking and summation. While a columnar journal or ledger is a very common and efficient way to record trust fund transactions, columnar itself is not a distinct accounting tool, in the same way a journal or ledger is. It's a design choice within those tools. Given that a journal, a cash ledger, and a beneficiary ledger are all distinct and essential record-keeping tools for trust funds, columnar stands out as describing a format rather than a unique tool. While useful, it's not a tool that should not be used, rather, it's a way of using other tools. The question asks what tool should not be used, and columnar doesn't fit the category of an actual accounting tool, in the same way the others do. Question 828. Which law mandates informing the public about the sexual offender database? A. Megan's Law. B. Melrose Act. C. Unruh Act. D. Sex Offender Disclosure Act of 2002. Correct answer is A. Megan's Law. The Melrose Act is a California law that allows for the formation of special taxing districts to fund public facilities and services. Special taxes on property owners within the district. It has nothing to do with sex offender information. The Unruh Civil Rights Act is a California law that prohibits discrimination in public accommodations, housing, employment, and other areas. It deals with civil rights and discrimination, not sex offender registries. Megan's Law is a federal law that requires states to notify the public about the whereabouts of registered sex offenders. It was passed in 1996 in response to the murder of a young girl named Megan Kanka by a registered sex offender who lived in her neighborhood. While there is a Sex Offender Disclosure Act of 2002, it's not as widely known as Megan's Law and may not be the primary law mandating public notification about sex offender data. Therefore, Megan's Law is the federal law that requires states to inform the public about the whereabouts of registered sex offenders. In California, this is primarily done through the Megan's Law website. Real estate agents and sellers in California are also required to provide a notice to buyers about the existence of this database. Question 829. If a potential client brings a friend with him on a broker's tour of properties, the broker should A. Politely inform the friend he is not allowed on the tour. B. Double the number of properties being shown. C. Enlist the friend as an ally. D. None of the above. Correct answer is C. Enlist the friend as an ally. Politely informing the friend they are not allowed would likely alienate the client. Doubling the number of properties is unnecessary and could overwhelm the client. Politely acknowledging and including the friend creates a positive and welcoming atmosphere for the client. The friend may be an important confidant or advisor to the client, and their opinion could significantly influence the client's decision. By making the friend feel comfortable and valued, the broker can potentially turn them into an advocate for the property and the broker's services. The friend might offer perspectives or ask questions that the client hadn't considered, which can be helpful for the broker in understanding the client's needs better. A positive experience for the friend could lead to future referrals from them as well. A broker can handle the situation in a professional and courteous manner. Here are some possible approaches. 1. Ask the seller. The broker can politely ask the seller if they are comfortable with the friend joining the tour. If the seller agrees, the friend can participate. 2. Offer a separate tour. If the seller is not comfortable with the friend joining the main tour, the broker can offer to schedule a separate tour for the friend at a later time. 3. Provide information. The broker can provide the friend with information about the properties being shown, such as floor plans, photos, or virtual tours. It's important for the broker to prioritize the seller's preferences and ensure that everyone involved feels comfortable with the arrangement. Question 830. A 50-year-old residential property and a new residence are on comparable lots. The cost approach would be more efficient in appraising the A. New residence. B. Old residence. C. Either residence. D. The cost approach cannot be used for residential properties. Correct answer is A. New residence. The cost approach determines a property's value by estimating the current cost to rebuild or replicate its structures. From this figure, depreciation is subtracted. Finally, the value of the land is added to arrive at the total appraised value. The cost approach is highly reliable for a new residence because the cost of construction materials and labor are current and readily ascertainable. There is also minimal, if any, depreciation to calculate. For an older residence, like a 50-year-old property, the cost approach becomes much more challenging and less reliable. Estimating depreciation, physical deterioration, functional obsolescence, and external obsolescence on an older property is complex and highly subjective. It's difficult to accurately determine how much value has been lost due to age, wear and tear, outdated design features, or external factors over 50 years. Question 831. A formal declaration that an affidavit is true by someone whose beliefs prohibit taking an oath is called an A. Assertion. B. Proclamation. C. Affidavit. D. Affirmation. Correct answer is D. Affirmation. An affirmation is used to declare the truth solemnly and formally but not under oath. They are usually utilized by persons who decline to take an oath for religious reasons. It carries the same legal penalties for perjury as a sworn oath. Question 832. Companies wishing to act as an escrow officer must apply for an escrow license to the A. Bureau of Real Estate, B. Better Business Bureau, C. Department of Business Oversight, D. HUD. Correct answer is C. Department of Business Oversight. Important note: the California Department of Business Oversight, DBO, was renamed the Department of Financial Protection and Innovation, DFPI, on July 1, 2020. When using older study materials, remember that the Department of Business Oversight is the correct answer for the agency that regulates and licenses independent escrow companies. This is because some questions might predate its renaming. Bureau of Real Estate, now California Department of Real Estate DRE, licenses real estate brokers and salespersons. While real estate brokers can sometimes act as escrow agents for transactions they are involved in, dedicated escrow companies are licensed by the DFPI. Better Business Bureau is a private, non-profit organization that promotes ethical business practices. Not a government licensing body. HUD, Department of Housing and Urban Development, is a federal agency that deals with national housing programs and policies. Does not license state-level escrow companies. Question 833. A vertical load such as a floor or the roof is supported by A. Interior sheathing, B. Siding, C. Supportive joisters, D. Load-bearing walls. Correct answer is D. Load-bearing walls. Load-bearing walls are specifically designed to support the weight of the structure above them, including floors and roofs. They transfer the vertical load from the roof and floors down to the foundation. They are crucial structural components. Before renovating, homeowners should be aware that identifying load-bearing walls can be tricky in newer houses or those with past structural changes like room additions. These walls are critical and cannot be removed without proper structural modifications. An architect or engineer should be consulted. Joists, or supportive joisters, are horizontal framing members that span between walls or beams. They directly support the flooring or ceiling, roof sheathing. However, the weight they carry is then transferred to the load-bearing walls, or beams and columns, which then transmit the load further down to the foundation. Interior sheathing provides rigidity to walls and a surface for finishes, but it's not a primary load-bearing element. Siding is an exterior finish material and provides no structural support for vertical loads. While joists directly support the floor, roof deck, the load-bearing walls are the fundamental vertical elements that carry these cumulative vertical loads through the structure to the ground. Question 834. If a purchaser under a land contract makes deposits into an impound account designated to cover taxes and insurance, those funds cannot be used for any other reason without consent by the A. Beneficiary, B. Seller, C. Purchaser, D. Impound accountant. Correct answer is C. Purchaser. A purchaser under a land contract is an individual who agrees to buy a property from a seller over a specified period of time. In a land contract, the seller retains legal title to the property until the buyer completes all payments. During this period, the buyer takes possession of the property and makes regular payments to the seller. The purchaser is the one who makes payments into the impound account. The funds in this account are intended to cover property taxes and insurance premiums on behalf of the purchaser. The seller, as the legal owner of the property, benefits indirectly from the timely payment of these expenses, but they do not have direct control over the funds in the impound account. Question 835. The most significant factor in qualifying a prospective loan borrower would be A. Number of dependents, B. Debt-to-income ratio, DTI, C. Job prospects, D. Credit score. Correct answer is B. Debt-to-income ratio, DTI. Debt-to-income ratio, DTI, directly measures a borrower's ability to afford monthly loan payments. It compares their total monthly debt obligations, including the new loan payment, to their gross monthly income. A high DTI indicates that a large portion of their income is already committed to existing debts, making it difficult to take on more. Lenders have strict DTI limits, and if a borrower exceeds this threshold, they are often immediately disqualified, regardless of other factors. A credit score is vital. It indicates a borrower's past payment behavior and willingness to repay debt. However, even an excellent score doesn't guarantee they can truly afford a new loan, as income and existing debts also play a crucial role. Stability of employment and income are crucial, as they feed directly into the calculation of the DTI. However, job prospects itself is less quantifiable than the DTI. Number of dependents impacts a borrower's disposable income but is factored into the overall financial picture, often indirectly through DTI calculations or specific underwriting guidelines. The DTI directly assesses the borrower's capacity to repay the loan, which is often the primary concern for lenders.